Welcome to another edition of AML Conversations. I'm John Byrne with AML Right Source, and with me, a repeat guest, we're real pleased to say, Sarah Beth Felix. Sarah Beth is the president of Palmero Consulting. She's also involved with a bank in Vermont, many other things, very active, and I've said this many times on LinkedIn, and if you're not following her, you're missing out on her insight and takes in not only a very quick fashion, but very detailed fashion. And she just recently decided to issue a newsletter. The newsletter is Dirty Money Weekly, and it already, as of this recording, has close to 3,500 subscribers. It's free, and it will take some of the insight, much of the insight that Sarah posts on a daily basis, also on a weekly basis. So again, Sarah, thank you for taking some time today. I know you got a lot going on. It's holidays, but I appreciate you taking a few minutes with us today.
Yes, thank you so much for having me back. I'm glad I didn't overstep on all of my other strong comments and other ones that we've recorded. So it's nice to be invited back.
No, that's why you're back. Because you tell it like it is, as they used to say.
Yeah.
So interesting, whenever you do a year in review, and I've done a bunch of these over many years, I don't think there's ever been a year like 2025 for a variety of reasons. We're not going to talk about the political angles unless they touch on our space, but just the changes or potential changes in AML and sanctions and CTF, not just here in the States, but internationally with all that's going on. So we want to talk a bit about that, get your take. And why don't we start with the banking agencies in the U.S.? There's been obviously some executive orders that feel free to reference, but there's also been a number of proposed and some other changes. I think the last time we talked, I'm fairly certain, I know we talked quite a bit, we talked about the basically the pausing of the investment advisors requirement, and that came earlier this year. But give us a high level of your take on the banking agencies in 2025, and then we'll talk about some of the specifics.
Yeah, so I think at like a 50,000 foot level, they're going the exact opposite direction of where I had hoped they were going to go for many years, right? Like for a lot of years, especially breaking down consent orders. I've talked about the disparity between some of the federal banking agencies, and I really was hoping that the NDAA, our AML Act, would kind of bridge that gap, right? I worked with the House Financial Services Committee on some of the language in that, particularly around the examiner boot camp. And so for many years, right, that was many years ago. And so for many years, I've just been kind of waiting and hoping, kind of like a kid with a delayed Christmas, trying to like, oh yes, we will finally get all of the examiners from all of the agencies singing from the same hymnal. And then 2025 comes and it's just like, what hymnal, what training, everyone, let's try to forget everything that we know. And I'm like, no, we're supposed to be doing the opposite. We're supposed to be expanding what we know and operationalizing for the good of the financial services industry and for the good of protecting our framework in the US. And I just feel like every single guidance piece that has come out, it's like in the name of efficiency, and the first thing that's cut is our industry. It's never like in the name of efficiency, let's start looking at CRA or HMDA or all these other huge, time sucks that a lot of community banks have. The first thing on the chopping block is what we do. And I'm like, it's just been like it's been a constant cognitive dissonance for me. Because the priority of the administration is, stopping fentanyl and getting rid of TCOs, and then we see all the gutting by all the agencies. So it's been tough.
Yeah, I think that's the key, right? And that's happened in other areas outside of our area. But on the one hand, you say that the priorities are, fentanyl prevention or elimination, what have you. As you see, transnational criminal organizations, human trafficking is still on the table for this administration, so that's a good thing. But then IRS CI is spending inordinate amount of time on immigration issues. So is the Homeland Security.
Yeah.
And frankly, the FBI, I'm not quite sure, I'm not being facetious, what they are focused on. I mean, a lot of it is sort of day-to-day law enforcement, I guess, but they also had a very robust financial crime and counterterrorism aspect. And I've talked about this before, the State Department had a counterterrorism division that's basically gone. So you're right. On the one hand, they're saying let's make, my words, the Bank Secrecy Act infrastructure more efficient. And as to our point before we started recording, the Anti-Money Laundering Act that passed in 2021, early 2021, was going to do some of that, right? But instead, well, on the one hand, we're saying we want to reduce. We're also going to reduce your resources to handle this. Give us what's your take, and we'll go back to some of the agencies, but some of the enforcement actions in this year. There's been some, and I know you opine on them all, but just in general, what was your take about, are there a theme to these enforcement actions? Give us a sense of that.
Yeah, so the very, very, very limited ones that we saw from the traditional federal banking agencies, FRB, FDIC, and OCC, of course, NCUA has not issued an enforcement action in years, so we're not even going to talk about them. But there has been very, very limited, I believe 4 that I can remember, that have been issued, and I believe 1 or 2 of the 4 were actually under the prior administration, and I think they just kind of snuck them in. But FINRA, really, the only SRO that we look at, so they aren't truly an FBA, they're not truly a federal banking agency. The SRO that FINRA is, they are out front in multiples. Like, I think the last time that I did an update, they were at 20 or 21 penalties directly related to an AML failure. I don't understand why we have the one well, of course I understand why we have the one agency that is an SRO that's not been politicized. That's what I'm left to assume, that it hasn't been politicized because it is an SRO, not an FBA. Right. And therefore they are able to not have to deal with, different priorities of different people that are coming in, and they're just keeping their, their firms accountable to what they are supposed to be doing. So, the other agencies, as far as what they've issued, there hasn't really been anything shocking. It's all been almost a copy paste, even though I never copy paste. It's been, in other words, a copy paste of almost every other consent order that we've seen. Lack of resources, lack of true authority, missed suspicious activity. Of course, they never name the missed suspicious activity. They just kind of imply it. An incorrect view of risk of customers. Those are all things we saw under the current administration's first administration, under the last administration as well. So I don't really see anything new and different. What I'm hoping, if the changes that are being lobbied right now are actually, like, if I were to put on my hopeful hat and assume that they really want to make an efficiency and effectiveness play here, what I would like to see is material findings, and not financial material findings like Comptroller Gould talks about, but actual, like, hey, you missed a whole bunch of human trafficking SARs that you should have filed on. Like, that's the kind of stuff that we're missing, and that's what I've long lobbied for, right? And that's what we've talked about. We need better testing. We need better agencies to hold people, banks, accountable. But I don't think it comes in the form that they're doing it now, which is basically like, well, unless it's financial material risk, we really don't care. Which is what has been said. I mean, not that we don't care, but they just keep saying, unless it's financial material risk, it's like, it's just killing me.
No, I hear you. Recently, it was reported, I think, in the Wall Street Journal, and I've yet to see the document. Maybe you've seen the document, that the Treasury is going to push for, in terms of the AML program changes, and this is high level. I'm not in the weeds of this. Again, didn't see the document. That FinCEN would now have the authority, or the veto authority, to overrule banking agency decisions on Bank Secrecy Act issues, whether they be civil penalties, consent orders, or what have you. Not sure how that would work in practice, but given couple things. The lack of resources at FinCEN historically has been the case since they first existed, number one. And number two, the collaboration with the agencies. We can both argue that oversight in the BSA area sometimes is misguided in terms of focusing on, perhaps process more than goals, that sort of thing. But from your perspective as a practitioner and somebody that advises and counsels clients, and we'll talk more about what to do for 2026.
Yeah.
But given all we know now, which is not a lot, if this were to become law or regulation, what would be the practical impact, do you see, of having FinCEN overseeing everything from the OCC, the Fed, and the FDIC, and maybe even NCUA?
I mean, I see an absolute bottleneck. One of the issues we saw with some of the consent orders that were released over the last several years was that it took several years to get to the consent order. So we would read a consent order, then they would talk about the relevant time period, and the relevant time period was minus 18 months, and then beyond that, right? It was a long time. So I see that. I see a bottleneck 100%. FinCEN is the smallest FIU. When we look at our peer nations, they are the smallest FIU for the number of financial institutions that should roll up under them. So, and that's present day. So if we make them an authority and a final step in issuing an enforcement action or a consent order, I do not see that playing well in terms of getting consent orders out the door, meaning that banks will continue doing what they shouldn't be doing. Because let's face it, banks only change when they have an agent of change, and that agent of change is pain, and that pain is a consent order. Now, there have been, and like you said earlier, there have been many instances where there have been consent orders that have been based on the letter of the law, not on the spirit of the law, and I think that has to go. But I don't think the fix for that is making FinCEN the de facto, expert at whether or not a bank should get a consent order, because a lot of times in order for it to reach FinCEN's level, that examiner is going to have to prove in some way, shape, or form that the missed suspicious activity was directly of interest to law enforcement. And I think that's tough because we know that SARs will sit out there for years and then they become part of a case. And that doesn't mean that SAR isn't valuable. It just may not be valuable right now when you're looking at it, but it may be valuable in 3 months or in a year. And I think that's going to be part of the issue, is that it'll be, well, you, bank examiner, you don't know what suspicious activity was missed, and we know best. So therefore, your consent order has no legs, which means that nothing is going to change at the bank, which means we're even further back than we were years ago. It's just, I don't see this working well at all.
Yeah, it doesn't seem like they've thought it through. One area that you've been very active in, and there's also been activity at the federal level through past several administrations, has been OFAC issuances. A number of those, sometimes, well, it's a lot of times hard to keep up. And I know you pay a lot of attention to that. What's your take on the themes, if there are any consistent themes with OFAC penalties in 2025, and what sort of recommendations do you have to the AML professional out there who's trying to figure out how do I stay on top of this, other than obviously, daily updates and all the sort of typical things, but what do you see in the OFAC space?
Yeah, so I think it is interesting. The last two weeks, we've seen 4 different penalties issued, particularly, well, only related to Russia. And they've been pretty quick on getting these penalties out. So I think we will continue to see that. But as far as the themes, I mean, what's pretty interesting is the last 4, the themes really have been kind of like to OFAC. I mean, it's just been like, and I don't care, like kind of a screw you type of attitude. I mean, every single one of those last 4 penalties has been OFAC told them, don't do this, whatever it's property, investment. And they go, well, I know better than you. And in 2 of the 4, sanctions lawyers were directly involved and named, not the lawyer's name, but they were cited in there as giving bad advice. Now, one of them was because the requesting firm did not give, I think, enough information to that sanctions lawyer. But I think the issue here is all of the penalties that we've seen, every single one of them have all the monies associated with them have gone through a hyper-regulated entity like a bank or a credit union, every single one of them. Now, of course, they aren't named, but they still carry that risk.
Right.
And so for me, the takeaway, if you're a traditional financial institution, you're looking at your customer base and you're going, wow, I have a lot of private equity funds. I should probably reach out to them and ask them what they're doing for sanctions. I mean, that's a great first step. And because sanctions are public, right? It's not a money laundering thing that we have to be super secret about. It is public knowledge. I think that is a lost art. I don't know how many banks and credit unions I've spoken to, especially this year, where I encourage them. As soon as you see international payments and you're looking at a private equity firm, or you're looking at a construction business, or you're looking at a widget maker of some kind, a real estate company of some kind, and you start to see international payments, wires, you need to reach out. Your first thing should be, hey, would love a copy of your sanctions program. Can you please let me know what you're doing? And that'll lead to one of two things. They will go, what sanctions? And then you go, oh crap, right? I really need to make sure that they are not evading sanctions. That's what a lot of these penalties were. They were removing a sanctioned person from a business in order to affect payment, and that again goes through a traditional financial institution. And then the second thing that it does is it gives you a little bit more comfort that, like, hey, there is another set of eyes that's looking at this. They do know what sanctions are. They do know they can't deal with Russia and all that kind of stuff. But most times it'll lead to that first one, which is a response back from your customer saying, what are sanctions? So
do you worry, obviously that's happened in the sanctions space. Do you worry in general, given the environment that we're in terms of the lack of clarity regarding AML oversight and the specific direction on being more efficient to relieve burden, that some CEO boards of directors may tell their compliance officers, maybe dial it down a bit? Is there a concern there? And if that does occur, what's your advice to those compliance officers? Not whether you should stay or go, but just in general. I mean, how do you make the case that, look, we should keep our eye on the ball here, even if we don't think the agencies aren't going to be examining us as frequently, if they're not going to be focusing on process versus goals, all those things that we've been trained throughout our careers. What do you see? This is more of a, I guess, looking forward question too, but just in general, a compliance officer comes to you and says, Sarah, I'm trying to tell my leadership, look, we still have to do these things. And they're pushing back. So what's that conversation? How should that be shaped?
Ooh, well, I have already heard that from several community bank clients. I have already heard that. In fact, it started this summer, where they were like, hey, they're taking a few of our folks and they're taking them over to the fraud side, or they're taking them over to consumer compliance. And I think that's a shame, because everything that they miss now, they can be held accountable for under the next administration, the next pendulum swing that we get.
Sure.
So that's like one of the things to remember. And I think that's been the biggest piece of advice that I've given out consistently, because a lot of those AML officers will be reaching out to me, and they have, and they tell me the story. Hey, I came in today and I lost 2 of my analysts. They pulled them over to the fraud side. They didn't even ask me. And the thing you have to do is nonstop in your board reports, keep reminding them. The opening statement should be, everything we missed today, we can still be held accountable for in 3 years, right? Under the next administration and the next focus that they have. I think the second thing would be to start leveraging some of the things that this current administration is focused on. They've made it very clear that there's now a criminal component to banking FTOs and SDGTs, all the Mexican cartels, and all of the suspected underlying activities that are related.
I should say
to
FTOs,
those.
for those that don't know, foreign terrorist organizations.
Sorry.
Go ahead. Yes.
So many acronyms, they just come out.
No, I get you. No,
normal. But I think one of the things to focus on is that now there's a criminal component to that we haven't really seen before. And I think that's also a good reminder to tell the board. Now, it's not to scare them, but it's to level set that, yes, you may feel like an OCC person may not be looking at this, but we also know that the Department of Justice is super into making sure that we don't deal with human trafficking and drug trafficking that's related to the cartel. So I think those are probably the two biggest those are two of the biggest things I give out on a consistent basis, is like, just bring the focus back to those things. If you've never filed a SAR on human trafficking, if you've never filed a SAR on drug trafficking, then this is your time to go after it and find it, and to make sure your board knows this is of importance. And just because your bank regulator may not specifically be diving deep on this doesn't mean that you're free and clear when it comes to the Department of Justice.
And you also, again, you do a lot of work with community banks. The false notion that there's not the same kind of risk is always has to be beaten back a bit. I mean, obviously the risks are based on your product, your geography, all those sorts of things. Yeah. But a community bank could certainly be misused by criminal organizations. And in some cases, when a larger institution exits a relationship that they feel they can't manage the risk, we know, because regulators have said this on panels, and they go to a small bank, the small bank shouldn't think, oh, this is really going to be great for our bottom line, because you just may not have the ability to manage it. So there definitely are risk indicators for small banks, which I know you work a lot with as well.
Yeah, and that's, I think the art of thinking like a criminal goes a long way in our space, right? Because we all, I would say 99.9% of us have really good, strong morals and ethics, but we have to think like a criminal in order to get out ahead. And I think especially when we have federal banking agencies that are making public statements and just out of the gate saying community banks are lower risk, that to me is like signaling to criminals, go to a community bank, right? Because no one's going to be looking for you, which to me means that community banks are kind of served up on a silver platter, because now they're going to get higher risk customers because of these public statements, and then they're not going to have the force to actually do anything with it because the focus isn't on it in an exam. Which we all know, working in community banks, the way that community banks get anything done is when a regulator criticizes them.
Sure.
It doesn't even have to be a formal consent order. It can just be criticism in a meeting, and then boom, I get a phone call. Hey, can you help us build this? And since that's gone, it's like it's almost like a double whammy for community banks. I don't know. It's weird.
Let's shift gears a little bit. Right before we recorded today, Time Magazine's Person of the Year was just announced, and it's the Architects of AI. So I know we could spend hours talking about an issue that I believe not everybody quite understands, but artificial intelligence as it relates to our world. And I'll give you a premise, and you jump off from the premise. I have heard, and maybe you have too, from some banks, that they've had to caution their analysts about using AI to write their SAR narratives. There's some value in putting all that information together, but at the end of the day, I talked to somebody specifically the other day who said they sort of stopped to make sure there's a review over that. But talk a bit about artificial intelligence as it applies to this world. What are some of the values you've seen already, and it's relatively early, and what are some of the challenges or concerns you have going forward, if any?
Yeah, so I think with AI, I think I'm probably one of the more saltier ones, and I don't think it's because I'm, getting to that 25-year career mark, right? I think it's because I am what I call hyper suspicious, and it's hard to make a machine hyper suspicious. Like you can't, like that is the human element, hyper suspicion, and so trying to program AI to function like a human in our industry, I think, is a dangerous and futile feat, really. But I think one of the ways that I wish AI would step in, that I don't see AI stepping in, but should, is in I need to go out and collect all this information in OSINT, essentially, open source intelligence, and then compile it into like little risk points that I can assign and say, oh, okay, look at that. That's kind of higher risk, score there. And I'm not really seeing that. What I'm seeing is AI running kind of haphazardly in the background, and none of the actual banks can say, hey, vendor, I don't want AI in this particular process. I don't want AI running in an alert disposition. I don't want AI running where I don't see the alert. And most of the vendors out there, they don't have that. They're just using it in the background, and and then you just have to trust them. And I think that's one of the biggest issues that I've found. I do like some AI solutions when it comes to actionable summaries of the executive orders for sanctions.
Gotcha.
Especially dealing with Russia, right? We're dealing with 40 plus EOs. I don't have the time if somebody triggers on Russia and I see a Russian passport. I don't have the time to go read 40 executive orders to see whether or not this person who works for this company is, but AI can do that. I will say I have tested it. I've tested multiple uses of AI, and they all have failed me. I mean, basic sanctions questions. I've run it through Grok. I've run it through chat. I've run it through Open. Basic sanctions questions. I've uploaded sample procedures, and they've missed it all. And so I don't think it's going to be the thing that like cures all of our issues. I think we need humans. We need critical thinkers. We need hyper suspicious people, curious people, and a machine can't do that. A machine cannot do that because AI is only as good as the lived experience, right? Like somebody asked me the other day, well, I'm going to take all your consent orders and all your posts, and then I'm going to put it in AI, and then I'm going to train it. Try it. Try it. I mean, I've tried it, and it still falls short because AI hasn't lived any of those things. I have lived multiple remediations.
Sure.
Right. And so I think that's, I don't know. I am not optimistic. Surprise.
So another area we could talk a lot about, but I just want a relatively quick take, and you do write about this, and that 2025, if it told us nothing, it told us the massive difference between the acceptance, at least at higher levels, of cryptocurrency, digital assets than, say, in Europe. Not that Europe's not utilizing it, but they seem to be more concerned about the fraudulent use of crypto and the use of it for money laundering and sanctions evasion and all of that. What's your big takeaway in 2025 in the AML space regarding cryptocurrency related topics?
Well, the U.S. isn't even in the game at this point, right? I think we're still in the locker room, thinking about putting on our gear and maybe getting out on the field. MiCA in the EU, they have country level crypto focused AML laws. We took AML outdated laws for money service businesses and then shoved crypto underneath it. We have, I mean, it's beyond comprehension that we haven't updated our MSB laws, even just for fiat. And then we look at that and say, oh, this is 40 years old. Yeah, let's shove some new value streams like crypto under that. So I think the US is, I think we're way far behind on effective regulations and patchworking things, saying, having things like the Genius Act and stuff. It's not, I don't see it fixing it. I think we need to have MiCA-like crypto laws.
And MiCA is what?
MiCA is the crypto framework in Europe.
Yeah, the infrastructure.
MiCA.
Yeah, the infrastructure. Okay, cool. Right. All right.
And I think that's the thing that's missing. We don't have anything new. Yes, we have the Genius Act, but that's not new from a all crypto, right? And we really just need new laws. But I know we're not going to get new laws because this administration has said there's no new laws unless we repeal 10.
Right.
Right?
I think that's right.
Yeah.
I appreciate your time. The newsletter is Dirty Money Weekly. Let me get you out of here on this. Give us your take for 26. What are the big items that either concern you or we should be watching? I don't necessarily think that your 99% of people that are moral ethical is correct. I hope you're right. So that's a different issue, whether or not we're pardoning drug traffickers and
Yeah.
that sort of thing in 2026. But from a practical standpoint, you're going to talk to a board of directors next week and they say, all right, Sarah, you've told us all this. What do we expect in 26? You're not going to know necessarily what laws or regs, but just in general, and how should we be prepared?
Yeah, so I would say we will continue to see sanctions penalties. I think that'll be kind of the course we take on Russia. I'm certainly not an expert in those types of relations, but I mean, that seems to be a trend for right now. I would assume that we will start to see some DOJ cases regarding the TCOs, regarding the cartel, which will be good to operationalize, because I do not think those will turn into necessarily consent orders. I think those will live in PACER, right, in those types of files. But I think for boards and banks, the things that they have to remember, like I said earlier, everything that's missed now can still be discovered under the next administration.
Sure.
So I think, for me, if there's a bright side to this time that we're in, it would be for AML officers to take this time to burn things down, right? We are plagued with legacy old AML policies and risk assessments that were handed down generation after generation, and they don't work for you and they don't move the ball forward. There is nothing of value that comes out of it. It's a time suck every year, and you just kind of update it because you don't have time to do anything else. And I think this is the perfect time to go, you know what? That risk assessment, that 88 pages of a risk assessment, does nothing for me at the end, doesn't give me a different view of my threats or my vulnerabilities. Let's, with board approval, let's stop doing that and let's make a shorter one that's focused on threats and vulnerabilities, and then talk about risks. And I think that's one of the things that boards need to be focused on. Like, if you want to be efficient and effective, you can't keep doing the things that we started doing 20 plus years ago. And so I think now is the time to start doing that, because the regulators really aren't hyper focused on what you're doing and what you're not doing.
Yes, to say the least,
Yeah.
right? Sarah Beth, thank you so
Yeah.
much. Have a great Christmas and good New Year. Happy holidays.
you.
Thank you for all of this. And as I say, folks, if you're not following Sarah Beth, you're missing out. So you need to do that. So take care.
Thank you, John.